Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're talking about the upcoming full-year profit season, where you can make or bust on any single investments, where stocks move around very sharply. And to talk to me today about it, we've got Sam Granger from Totus and Ben Rundle from NAOS. Ben, I'll start with you. Give us some general expectations, what you think about this upcoming reporting season.
So strong? I think if we look at the reporting season as a whole, I think growth will be okay, but I think a lot of that will be driven by the resources sector. So we're seeing commodity prices on a pretty strong run, and a lot of the companies that service the commodity stocks are reporting stronger order books as well. And the commodities make up a decent part of the market, so I think that'll be that'll sort of buoy the entire headline result. In terms of sectors we're looking at, things with a structural growth angle to them. So infrastructure is a good example, with Adelaide Brighton Cement, probably a decent pick there. And tourism is also one that's obviously got a structural growth tailwind behind it. Flight Centre and Qantas will do well. So there are pockets of the market I think will do okay.
Sam, you got any ideas of what mightn't do so well? What we should avoid just for the moment in the short term?
Well, I think the tone's been set in the first few days. So there's going to be bombs in the small and mid-cap space. We've seen that with Navitas, we've seen that with Essentia. So I think you want to avoid the companies that have had operational issues in the past 18 months until you've got some real confirmation about the outlook in those stocks.
All right, you've taken us down this burrow where we get bad news. Stocks down 10%. Navitas, for example, the other day, down 10%. You hold it, what do you do?
Yeah,
Besides feel sick.
Yeah, it happens to everyone and it's horrible. We think the key is not to get anchored to the previous share price. So just because it's down 10% doesn't mean it's now cheap. You need to go away, reassess fair value. It might be an opportunity, it might not be.
Okay, Ben, same question to you.
Yep.
Sitting there, notice received, damn, they've missed.
Yep.
10%'s not bad. I've been there when it's been down 40.
Yeah.
What do you do at that point in the cycle?
Look, I think as a fund manager, it's unacceptable to do nothing. So you have to revisit your initial investment thesis. If the investment thesis still stacks up and it's a short-term hiccup, you should buy more, which takes a very brave investor. If something has changed with the investment thesis, you're best off getting straight out of the stock and not waiting for a rebound. Just take your losses and move on.
Okay, so we go through profit reporting season twice a year. Is it a time where you do change your stocks a lot? Are they the catalysts that you're looking for? Yeah,
I mean, reporting season by its general nature is, there are a lot of catalysts around, so it does tend to shift portfolios more than what you'd normally see at any other time of the year. But that's just a function of what the earnings quality's like, what the outlook's like, and how you adjust your portfolio to best suit the conditions for kind of the next 6 months if you want to take a short-term view, or probably less movement of the portfolio if you're taking a longer-term view.
Let's get out of the doldrums. Let's talk about the other side, stocks that do beat. Stocks rally on that basis. Is it time to buy more? Momentum's a good thing in the short term or not?
Yeah, it can be. So a lot of the time there's an instinct when a stock's up a lot, you want to take some off the table. Maybe it's overweight in your portfolio, but often that's a mistake. You've got to ride that momentum when it's there.
Okay, all right. So now let's get to this profit reporting season. Something you think might actually surprise us on the upside or downside that you might avoid. Can you give us a name?
Yeah, NIB, the code's NHF. We think that could upgrade.
Life insurance?
Private health insurance, had a very strong first half. The market's got earnings going backwards year on year in the second half. We think that's unlikely given the operational momentum in that business. So that's an upgrade candidate. Okay,
Ben, you get the same opportunity. Something we've got 3 weeks of it ahead of us.
Yep.
Pick the needle out of the haystack and tell us one that might do something.
A small cap that we own, M&F Group. We think it'll have a very strong result. They're doing about 20% organic earnings growth. It's a high margin business with low capex, very well run, and a strong balance sheet. So I think you'll see a good result from those guys.
Okay, overall, do you think we'll get a good season or not?
I think it'll be okay. I think as I said before, there's some sectors which have a structural growth bent which will do well. Overall, I think we'll have modest earnings growth. If I was to have a guess, I'd say around the 4 or 5% mark for earnings.
Okay, Sam, what do you think?
Yeah,
overall,
I think that's about right.
The health check will be okay.
Yeah, I think it's going to be stock specific. I don't think there's going to be a broad market win to be had out of reporting season.
There you go. Earnings do matter, so watch the reporting season very carefully.